ExamPrep.School. Texas Limited Lines Insurance Exam. Exam code INSTX-LL93. There are 6 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Commissioner of Insurance and Department Powers. Insurance terms and related concepts. Licensing requirements. Marketing practices and agent responsibilities. Policy provisions. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. In insurance terminology, pure risk is best described as exposures that A. Present only the possibility of loss. B. Present the possibility of both gain and loss. C. Arise from deliberate fraudulent actions. D. Are evaluated solely through mathematical models. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is A. The correct answer is pure risk because it involves situations where only loss can occur and there is no potential for gain. Scenarios with potential gains and losses define speculative risk. Exposures stemming from deliberate fraud describe moral hazards. Assessment through mathematical models refers to risk measurement techniques rather than the nature of the risk itself. Reason B is not correct. Situations with potential for both gain and loss exemplify speculative risk, not pure risk. Reason C is not correct. Exposures arising from deliberate fraud reflect moral hazards, not pure risk. Reason D is not correct. Evaluation through mathematical models pertains to risk measurement, not the defining characteristic of pure risk. Question 2. Speculative risk differs from pure risk in that it A. Allows only the possibility of financial loss. B. Results exclusively from unintentional events. C. Allows for either financial gain or loss. D. Is assessed solely by statistical methods and the correct answer is C. The correct answer is speculative risk because it involves exposures that could result in either gain or loss. Risks permitting only losses define pure risk. Exclusive results from unintentional events describe accidental perils. Assessment solely by statistical methods refers to risk quantification techniques, not the nature of speculative risk. Reason A is not correct. Exposures allowing only financial loss correspond to pure risk, not speculative risk. Reason B is not correct. Risks resulting solely from unintentional events describe accident perils rather than speculative risk. Reason D is not correct. Assessment by statistical methods relates to quantifying risk, not the characteristic of containing gain potential. Question 3. In property insurance terminology, a peril differs from a hazard in that a peril is the actual event causing damage, while a hazard is A. A condition that increases the likelihood of that event. B. The direct cause of damage itself. C. An intangible moral factor unrelated to physical loss. D. A regulatory requirement for policy issuance. The correct answer is A. The correct answer is that a hazard is a condition that increases the likelihood or severity of a loss-causing event, which is the peril. The direct cause of damage is the peril itself. Moral factors describe moral hazards, not the general concept of hazards. Regulatory requirements pertain to compliance, not a hazard. Reason B is not correct. The direct cause of damage defines the peril, not the hazard. Reason C is not correct. Intangible moral factors are moral hazards, not the general hazard that increases loss likelihood. Reason D is not correct. Regulatory requirements relate to compliance, not a condition increasing loss probability. Question 4. Which of the following represents a physical hazard in risk management? A. A slippery floor surface. B. Negligence in financial reporting. C. Intentional misrepresentation by an employee. D. Uncertainty in investment returns. The correct answer is A. The correct answer is a slippery floor surface, which is a tangible condition that increases the likelihood of physical injury or loss. Negligence in reporting and intentional misrepresentation are human factors, moral hazards. Investment uncertainty relates to financial or speculative risk. Reason B is not correct. Negligence in reporting reflects a human error hazard, not a physical hazard. Reason C is not correct. Intentional misrepresentation describes moral hazard, not a physical hazard. Reason D is not correct. Investment uncertainty pertains to speculative risk, not a physical hazard. Question 5. Moral hazard in insurance is best defined as an increased risk of loss arising from A. The insured's dishonesty or recklessness after coverage is in place. B. Events beyond the insured's control causing property damage. C. The potential for either gain or loss in a transaction. D. The use of probability models to calculate premiums. The correct answer is A. The correct answer is moral hazard because it refers to the increased likelihood of loss due to the insured's dishonest or careless behavior once insurance coverage exists. Events beyond control describe fortuitous perils. Potential for gain or loss defines speculative risk. Probability models relate to risk quantification, not moral hazard. Reason B is not correct. Events beyond control describe perils, not moral hazard. Reason C is not correct. Potential for gain or loss characterizes speculative risk, not moral hazard. Reason D is not correct. Using probability models pertains to risk measurement, not moral hazard. Question 6. After obtaining fire insurance on their warehouse, the owner stopped replacing worn fire extinguishers and disabled a malfunctioning smoke alarm. Which term best describes this type of hazard? A. Morale hazard, an indifferent attitude or carelessness that increases loss likelihood. B. Moral hazard, a deliberate act or dishonesty intended to cause or enlarge a loss. C. Physical hazard, a tangible condition of property that elevates the chance of loss. D. Peril, that the specific event or cause that directly brings about a loss. The correct answer is A. The scenario illustrates a morale hazard because the insured's careless attitude and indifference rather than intent to defraud elevated the chance of loss after coverage was secured. Reason B is not correct. This describes moral hazard, which involves intentional wrongdoing or fraud, not mere carelessness. Reason C is not correct. This refers to a physical hazard inherent in the property's condition, not the insured's attitude. Reason D is not correct. A peril is the cause of loss itself, whereas this scenario centers on policyholder behavior. Question 7. Under Texas common law principles of property insurance, an insured must have an insurable interest at which point to recover for a loss. A. Only at the time of application for coverage. B. At both policy inception and time of loss. C. Only at the time of loss. D. Only at policy delivery. The correct answer is C. The correct answer is only at the time of loss because, under Texas common law, a property insurer covers losses only if an insurable interest exists at the moment of loss. Earlier or later, interests do not qualify. Reason A is not correct. This is incorrect because having an interest only at application does not satisfy the requirement at the moment a loss occurs. Reason B is not correct. This is incorrect because requiring interest at both inception and loss exceeds the minimal legal requirement for property coverage. Reason D is not correct. This is incorrect because interest at policy delivery alone does not ensure coverage at the moment of loss. Question 8. In Texas life insurance law, an insurable interest must exist at which point for a policy to be valid? A. Only at the death of the insured. B. Only at the first premium payment. C. Continuously throughout the policy term. D. Only at policy inception. The correct answer is D. The correct answer is only at policy inception because life insurance requires proof of a valid, insurable interest at the contract's formation. Existence of interest after that point is not required. Reason A is not correct. This is incorrect because the interest at death alone cannot validate a contract if it did not exist at inception. Reason B is not correct. This is incorrect because the first premium payment does not itself establish the legal requirement of insurable interest. Reason C is not correct. This is incorrect because continuous interest is not mandated after issuance under Texas law. Question 9. Which test is used in Texas courts to determine the existence of insurable interest for property insurance? A. Blood relationship test. B. Valuation test. C. Pecuniary loss test. D. Equitable ownership test. The correct answer is C. The correct answer is the pecuniary loss test because Texas courts focus on whether the insured stands to suffer a financial detriment from the loss of the property. Reason A is not correct. This is incorrect because mere blood relations do not establish a financial interest in property. Reason B is not correct. This is incorrect because valuation concerns the amount of coverage, not the existence of interest. Reason D is not correct. This is incorrect because equitable ownership is not the standard test for insurable interest in Texas property law. Question 10. After a fire damages a warehouse, the insurer pays the owner an amount that reflects the actual loss without allowing any profit. Which insurance principle is illustrated in this claim settlement? A. Principle of insurable interest. B. Principle of indemnity. C. Principle of subrogation. D. Principle of contribution. The correct answer is B. This option is correct because the principle of indemnity ensures that the insured is restored to the same financial position before the loss without profit. Reason A is not correct. It is not about having a financial stake in the property at the time of loss, but about the extent of payment. Reason C is not correct. It does not concern the insurer's right to seek recovery from third parties after paying the claim. Reason D is not correct. It does not involve sharing loss payments among multiple insurers. Question 11. A commercial refrigerator originally cost $50,000 has a replacement cost of $60,000 today and shows accumulated depreciation of $15,000? Using the actual cash value formula, what payment amount applies? A. $35,000. B. $75,000. C. $60,000. D. $45,000. The correct answer is D. This option is correct because actual cash value equals replacement cost minus depreciation, 60,000 minus 15,000. Reason A is not correct. It subtracts depreciation from the original cost rather than from the current replacement cost. Reason B is not correct. It incorrectly adds depreciation to the replacement cost instead of subtracting it. Reason C is not correct. It ignores depreciation entirely and reflects full replacement cost. Question 12. Which statement best defines a flat deductible in property insurance policies? A. A threshold below which no losses are paid, but full coverage applies when exceeded. B. A predetermined percentage of the total insured value subtracted from each claim. C. A deductible that applies only once regardless of the number of losses. D. A fixed dollar amount that applies to each covered loss before insurance pays. The correct answer is D. The flat deductible is a fixed dollar amount subtracted from each covered loss before insurer payment. Reason A is not correct. This describes a franchise deductible, which operates by loss threshold rather than subtracting a set amount. Reason B is not correct. This describes a percentage deductible, which is based on a percentage of insured value rather than a fixed dollar amount. Reason C is not correct. This describes an aggregate deductible, which applies once per policy period rather than to each individual loss. Question 13. In a homeowner's policy with a 2.5% deductible and $270,000 dwelling limit, what is the deductible amount? A. $675. B. $6,750. C. $67,500. D. $750. The correct answer is B. A 2.5% deductible on a $270,000 limit equals 0.025 multiplied by 270,000 equals $6,750. Reason A is not correct. This reflects a misplaced decimal point, representing 0.25% instead of 2.5%. Reason C is not correct. This calculates 25% of the limit rather than the required 2.5%. Reason D is not correct. This figure is too small, reflecting only about 0.278% of the limit. Question 14. In insurance terminology, which of the following best describes a franchise deductible? A. A fixed dollar deduction subtracted from each loss payment. B. No insurer payment for losses under a specified amount, with full coverage once the loss exceeds that amount. C. A percentage of the insured value retained by the insured for each claim. D. A single deductible that applies to all losses within a policy period. The correct answer is B. A franchise deductible excludes small losses and provides full coverage only when losses exceed the specified threshold. Reason A is not correct. This definition matches a flat deductible which subtracts a fixed amount per loss. Reason C is not correct. This describes a percentage deductible which retains a percentage for each claim. Reason D is not correct. This describes an aggregate deductible that applies once over the policy term. Question 15. A commercial insured has a policy with an aggregate deductible of $200,000 per policy term. During the period, 3 separate losses occur: $80,000, $90,000, and $70,000. How much will the insurer reimburse for the third loss? A. $0. B. $70,000. C. $40,000. D. $30,000. The correct answer is C. The aggregate deductible must be met before any reimbursement. The first 2 losses of $80,000 and $90,000 consume $170,000 of the $200,000 deductible, leaving $30,000. On the third loss of $70,000, the insured pays the remaining $30,000 deductible, and the insurer reimburses $40,000. Reason A is not correct. This is incorrect because the deductible was fully met during the third loss, so some reimbursement is due. Reason B is not correct. This is incorrect because the insurer only pays after the deductible is exhausted, not the full loss amount. Reason D is not correct. This is incorrect because $30,000 is the remaining deductible, not the amount reimbursed by the insurer. Question 16. A business interruption policy includes a 72-hour waiting period deductible and provides net income coverage of $1,500 per day. A covered loss interrupts operations from Monday at 8:00 a.m. through Friday at 8:00 a.m. How much will the insurer pay? Will the A. $4,500. B. $1,500. C. $6,000. D. $0. The correct answer is B. The interruption lasted 96 hours, 4 days. The first 72 hours, 3 days, fall within the waiting period and are not covered. Only the remaining 24 hours, 1 day, are payable at $1,500 per day, so the insurer pays $1,500. Reason A is not correct. This is incorrect because it corresponds to coverage for 3 days after the waiting period instead of 1 day. Reason C is not correct. This is incorrect because it treats all 4 days as covered instead of excluding the waiting period. Reason D is not correct. This is incorrect because coverage is provided after the waiting period expires, so some payment is due. Question 17. Which of the following most accurately defines the insurer's subrogation right? A. The insurer assumes the legal position of the insured to pursue recovery from a negligent third party after indemnification. B. The insurer assigns its contractual obligations to the insured to seek reimbursement. C. The insurer uses its contractual authority to annul specific policy provisions to disclaim coverage for negligent third-party claims. D. The insurer directly disperses payment to a third-party claimant and waives any subsequent legal rights against liable parties. The correct answer is A. The correct answer defines subrogation as the insurer stepping into the insured's shoes after paying a claim to enforce recovery rights against the party at fault, whereas none of the other options accurately describe this process. Reason B is not correct. Describes an incorrect idea of transferring obligations to the insured rather than assuming the insured's rights. Reason C is not correct. Refers to canceling coverage provisions which is unrelated to subrogation recovery rights. Reason D is not correct. Describes paying a third party directly, which does not reflect the insurer's recovery against the negligent party. Question 18. All of the following are recognized methods through which an insurer may effect subrogation recovery except A. Electing to pursue a statutory lien against a third-party tortfeasor. B. Taking an assignment of the insured's cause of action. C. Retaining salvage rights to the damaged property. D. Offsetting the policy's deductible against the recovery amount. The correct answer is D. Except for offsetting the insured's deductible, the other listed methods lie in enforcement, assignment, and salvage rights are established subrogation recovery techniques. Reason A is not correct. Seeking a statutory lien is a legitimate means for an insurer to secure repayment from a tortfeasor. Reason B is not correct. Assignment of the insured's rights is a standard subrogation mechanism. Reason C is not correct. Salvage rights enable the insurer to recoup a portion of the loss through property disposition. Question 19. When included in an insurance policy, a waiver of subrogation endorsement most directly accomplishes which of the following? A. It prohibits the insurer from exercising its right to recover loss payments from a third party whose negligence caused the loss. B. It imposes an obligation on the insured to initiate and prosecute legal action against the third party to recover damages. C. It conveys the insured's right to subrogation to a non-party entity under the terms of the endorsement. D. It increases the scope of coverage to include additional non-named insureds without modifying policy limits. The correct answer is A. A waiver of subrogation endorsement bars the insurer from pursuing recovery against the third party, which directly prevents enforcement of subrogation rights. Reason B is not correct. Suggests an increased insured obligation, which is not the purpose of a waiver of subrogation. Reason C is not correct. Describes an assignment of rights rather than a waiver of the insurer's own recovery right. Reason D is not correct. Refers to coverage expansion, which is unrelated to subrogation waivers. Question 20. A homeowner's policy includes a 1-year contractual limitation provision requiring any suit to be filed within 1 year of a loss. The homeowner suffers fire damage on January 15, 2022. The insurer pays the claim on March 1, 2022, and the homeowner assigns subrogation rights to the insurer, Under Texas law, by what date must the insurer file suit against a negligent third party to preserve its subrogation right? A. January 15th, 2023. B. January 15th, 2024. C. January 15th, 2026. D. January 15th, 2032. The correct answer is B. This option is correct because Texas law preempts any shorter policy limitation and imposes a 2-year statute of limitations for property damage claims, which governs subrogation actions. Reason A is not correct. This reflects the policy's 1-year clause, but a shorter policy limitation is unenforceable under Texas law. Reason C is not correct. A 4-year limitation applies to written contracts, not to tort-based property damage subrogation claims. Reason D is not correct. A 10-year period exceeds any relevant statute of limitations for property damage or contract actions under Texas law. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below. We read them all. Find full practice exam books in the description or at ExamPrep.School.